Welcome back, everybody, to Markonomics 101 presents Hoot Loot. Be informed, be amused, but never be misled. Not like cable news that'll only give you mental illness. I should know. I should definitely know. Today's show is called The Potential in Pot, How to Keep Your Profits from Going Up in Smoke. That's why I'm sitting at a dispensary right here and loving it. We're going to have a special guest today. I'm not going to tell you who it is, but he just bought $1.5 billion worth of Bitcoin, and he has no idea why or how they're valued. If you saw last week's show, you know that we offered $100 to anybody that could tell correctly why Bitcoin has value. And so far, no one has come up with any answer at all. And we'll see if Elon does, but we'll tell you at the very end, in addition to which, we're going to have some amazing recommendations that you can actually invest in on Monday because they're set up perfectly. And with that, please like and subscribe. We love you to death. We want more of you to come back and learn about the market and how it functions and keep yourselves from getting nailed by those horrible investment banker type people. I used to be one of them. In any event, please like and subscribe, and we'll be right back with the charts. Welcome back, everybody. I failed to mention that we're having a giveaway. We want to have more subscribers, so we're willing to bribe you. We're capitalists here and proud of it. $200 to anybody who subscribes, who is a subscriber by the end of February. 200 smackaroonies, real dollars, right out of my pocket. And if Ace has to, go without food for a week, well, he's already volunteered to do that. So let's go to the charts and let's start painting a picture of what the world looks like really, instead of what those bozos on TV tell you. All right, let's start with the Dow Jones Industrial Average. This thing is getting, as I've said before, it's just chunking away. Ascending wedge, bearish formation. This thing is not looking great, not looking bad. Actually, a lot of stuff is sort of curling over. You're actually going to see the market as it transitions from bull to bear over the next couple of weeks. It's going to be a very interesting period because you're actually going to see the transition as we do 2 a week, and there'll be just a little bit of time in between each. All right, so the Dow, and here's the NASDAQ, again, looks really healthy. If you look at this chart right here, I mean, it looks like it's just chunking along, driving along, but beneath the surface, we're going to show you some interesting stuff. This is the NASDAQ for 2-hour intervals. Now, the reason I put this here is because you actually magnify the right half of the chart I just showed you. So in other words, that chart was a year. This chart is at 2-hour intervals, so it's about 3.5 months or so. And you have to forgive me because, oh my God, the aroma, the contact. Anyway, so the NASDAQ is actually looks like it may be just starting the process of breaking down. Not sure yet. Don't want to commit to it yet. We have some pluses and minuses, but more minuses than pluses relative to last week. Standard & Poor's 500, again, had a little bit of a breakdown. It's in a narrow range. And again, it doesn't look, some things are looking okay, some things are not, and we'll get into that. This is small cap index. This is, again, a sign investors buy small caps when there's speculative fever. One of the biggest problems right now with everything, and one of the reasons I want to just take this time to tell you about this, there are too many people that are fired up about the market, okay? And you have to really understand something. When everyone is in, there's no one to buy. So when everyone is in and everybody's happy and bullish and thinking, oh, things going to the moon, that's exactly the time to get out. And it's the hardest time to get out because you're doing something that people disapprove of, or they go, no, it's going to go up to, that kind of thing. Stay disciplined. Don't lose money. Don't let your emotions take you for a ride. That is the most important thing. I've been doing this for 40 years. My emotions still take me for a ride. So does Ace, but that's in a whole nother story. Dow Jones Transportation. I know this looks really complicated, and it is. Okay, this is a 7-point reverse waves, a small one within a large one. The key thing is transportations are what moves goods in the economy, be it by air travel, be it by Amazon, UPS, U.S. Postal Service, very correlated to the economy. These patterns that I'm showing you here, these sort of megaphone-like patterns, they're a series of higher highs and a series of lower lows. That's because the market is becoming fractured, okay? And they're having much more amplitude in each direction. Thanks to the Fed in all likelihood. But in any event, this is a very negative pattern. And you have two negative patterns, one inside the other. So right now, this would not give me a whole lot of confidence. And we're going to see that some of the individual companies are actually showing that there's some weakening going on while there's some strengthening going on in other areas. Okay, so this is what we talked about last week is the big story. It still remains a big story. Yields on 10-year treasuries are just starting to soar. Now, we've talked about this for months. If you've been watching this show for months, and I hope you have, or go back to some of the classics that we did a few months ago, we started talking about higher interest rates way back when. No one was talking about them. Right now, the Fed is stuck. They're going to have to raise them pretty soon. And I don't know how soon, but I can tell you this, it isn't far off because these things are starting to climb at a parabolic rate, and they just got started. They're starting from like zero. So here's the 30, same thing. The 30 is now across 2.1%. And again, I want to remind you that when you have low rates, going from 1 to 2 is like going from 10 to 20. It is absolutely magnifies what goes on. So this is a big move. It is going to affect a lot of people in ways they don't know yet. But we're going to tell you how to save yourself from it. All right, the US dollar, this is part of the reason interest rates are going up. We are running such a high deficit, spraying money everywhere, cash loot everywhere to everybody. And, basically, to get people to invest in your bonds, you need a higher dollar to do that, to get a higher interest rate. That's why the dollar's going, steady. That's why interest rates are going up. And the reason for that is the reason dollar denominated bonds are so attractive is because in Europe, Japan, and most countries, there's still negative rates. I still don't understand how negative rates are going to be unwound, but we're going to have some fun watching that. I can tell you that. Right here, this is the best way I have found to hedge your exposure to interest rates. If you have something like a variable loan and a big one you can't refinance, buy some of this. This is called the ProShares Ultra Short 20 plus years ETF. This goes inversely with, actually it goes directly with interest rates, inversely with bond capital. You got to remember that interest rates go up, the price of a bond goes down. So this thing is actually inverse, so it goes up when yields go up. I know that's kind of counterintuitive, but just keep in mind, bond yields higher means everything goes down, okay? Everything goes down. And that doesn't mean it's a bad thing. It just means savers get a little more for saving and borrowers have to pay a little more for borrowing. But it has a huge effect, especially after it's been zero for like the last 10 years. This is gold. I always talk about how much I love gold. Gold is hanging on by a thread. I mean, literally by a thread. I cannot entirely explain it except for this. I'm going to show you some other charts, including Bitcoin, and I think the action is elsewhere for the moment, and gold is quietly going to sleep. It will be back. It will be revived. It will be king again, just not right now. All right. Silver. Silver's looking a little bit better. The Reddit rebels had their go at it, kind of pushed it around a bit, but it is a big market. And even the famous Hunt brothers who tried to corner the silver market in 1980 were not able to do it, and they were multi-billionaires. So, I'm sorry guys, but this is a big one. One of the things I want to mention about silver and sort of emphasize is that it's relatively cheap to gold. In other words, there's a ratio, the gold-silver ratio. Silver's at about 26.7, gold's at about 17.75. So, you take that ratio, it's about, roughly 50, 60 to 1. The ratio has been as low as about 20, and it could go a lot lower than it is right now. So in other words, silver is much more likely to have a higher percentage gain. So if you want to take a risk, that's where you go. If you want to take less risk, gold's the place to be. All right, so we're going to show you a couple miners, and by miners we don't mean under 18 people. We mean people who mine gold. This is called Yamana Gold. I call it Yamama, but you can look at that pattern. It does not look good. Miners usually advance with the price of gold or in anticipation of the price of gold going up. This is a negative sign. This means gold is really hanging on by a thread, and unless we get some kind of event that's going to prevent this, I would look for gold to possibly go to lower levels. I don't know. We'll see. I mean, that's one that I have to ask the Magic 8 Ball about gold. Where's it going to go, dude? Shut up, you're ugly. Oh, jeez. I hate this thing. All right, well, we're going to go on to the next one. This is Coeur Mining. Coeur Mining is one of my favorite silver miners. Notice it has not broken down because silver has not broken down. It's acted a little bit better. Once precious metals start to go, I expect silver and the miners will lead. That's how we'll know that it's going to happen. It's just not happening right now. And it's not happening in the face of higher interest rates because they tend to have a dampening effect on gold and silver. So that's something to watch for. Inflation, on the other hand, which we talked about last time, with the price of oil going up and the price of just about everything else going up, inflation will ultimately be a benefit to gold and silver and just about everything that is not dollar denominated, including real estate. Real estate probably will do very well too. Not as well maybe as some of the other things, but it looks really close right now. I wouldn't be worried about it, even though people are worried about a whole bunch of things. So we're going to go on to some of the mega cap companies of the NASDAQ. Apple, here's something that is changing. Apple is breaking down. Notice that circle there at the right end of the chart. Apple has broken its trend line. It's the biggest market cap company in the universe. It's worth $2.4 billion, as we mentioned last time. Its market capitalization, the total value of Apple, exceeds all but 7 countries. That's what I call mania, that's what I call nuts, and that's what I call don't get your hands burned. Don't get your fingers burned in this thing by following the crowd. That's what's going to happen. It's virtually guaranteed. It may not happen tomorrow, it may not happen next week, but it will happen. All right. Amazon, not looking as bad as I thought it might. Actually looking pretty good. But I do expect if the market does turn down, this will turn down. But it's looking pretty good right now. So I'd still give this a neutral. Facebook, we did a little bit of fact checking here, and you can see that we employ Ace as our own fact checker. And he has a nose for the truth in news, and he found out that not one of these checkers actually was even capable of writing a check, let alone knowing a fact. So we kind of just, Facebook still looks pretty good, but it also looks like it's turning down. If you notice on the chart, it has to hold above that line of I think it's 250. If it breaks 250, it's down for Facebook. We go. Google is a tremendous looking chart. This one is like the best looking chart of all of them. This thing's holding up, helping hold up the NASDAQ, although ultimately it probably will be pulled down. Higher interest rates pull growth stocks down a lot. Why? Because they have high multiples. In other words, Google trades at like 30, 40, a multiple like that of earnings. If it earns $10, it trades 40 times that or something in that zone. Interest rates tend to affect growth stocks a lot. So you're going to see a very magnified effect on tech stocks and the NASDAQ as rates go up. And I think rates are unstoppable at this point. I don't think the Fed can do a damn thing about it. And now's the time to consider whether you want to get yourself liquid so you can enjoy the opportunities that are going to present themselves as other people are left holding the bag, and they will be. Trust me. Not everybody watches this show, and thank God you do, because you're going to have an advantage. All right, so next one is Microsoft, kind of curling over. Again, it's looking okay, but I could easily see this by next week, in a negative pattern. We've had a number of up weeks in a row, and that streak's right about to end. So on to the next one, Qualcomm. This one has been like on fire forever. These are the guys that make high-speed chips for the 5G rollout. This thing looks like it's just about to break down too. So a couple of them that are really important are right on the cusp, and we could see in the next few days that these kinds of stocks starting to break down in unison. Oh God, how can I have a show without Tesla? I was expecting Elon Musk. Oh, there he is. Elon, how you doing, buddy? Oh, come on. I wanted to ask you, why did you buy $1.5 billion of Bitcoin? What are you going to do? Give it away and give it back in change? They buy a car, they get a few Bitcoins? No? Okay, well, do you know what it's worth? Or do you know how it's valued? I was going to give you $100 if you could tell me. Okay, well, you have to listen to the end of the show, dude, in that case. But you're going to love some of the pot stocks as you are Mr. 420. All right, well, I'll talk to you later, bud. All right. Well, Elon didn't know the answer either. Now he's wondering, scratching his head, why did I buy $1.5 billion of Bitcoin? So did a company called MicroStrategies. They bought $500 million of Bitcoin. They're not in they're not in that business. What are they doing speculating in something that has value that only I apparently know? And you will all know at the end of the show. So Tesla is also, looks like it's breaking down. It's in a rounded top. It's had an amazing move. Everybody loves it, I know. There's no one that hates this stock. That's why it's going to go down. Once a stock or any asset becomes universally loved, that's the time it goes down, because everybody owns it and everybody will eventually want to sell it, make a profit to a greater fool than themselves. Unfortunately, there will not be any. I've been there myself. I've not only been the greater fool, I have tried to sell to the greater fools and proven myself to have been one. So I'm not taking anybody, criticizing anybody here. It's something we all do when we get emotional, when we start to chase a market that looks like it's a casino and it looks like instant gratification and winnings. And plus, we're sitting in a dispenser going, that makes you want to do it. All right, so Tesla needs to hold above 750. And they also, it wouldn't hurt if they made a profit every once in a while. Yeah, they make a profit on paper, but not really. Okay, so we're going to go on to some of the sectors. This is the bank index. These are by far the leaders that are left. The banks were the laggards before. They're now the leaders. Warren Buffett, the famous Oracle of Omaha, has sold most of his banks, including Wells Fargo, and we're going to show you that was not exactly well timed. And he bought Chevron. That was in his recent filing. Because he has a public company, he has to disclose his holdings, and those were just out. So Chevron was one of his add-ons. Apple and Wells Fargo were companies that he actually reduced in his portfolio. The broker-dealer index, look at that. That thing looks like is going to go to the moon. To the moon, Alice! It's just unbelievable. But when you're Goldman Sachs or Morgan Stanley and you're about to raise $74 billion for a company called SpaceX that is supposedly going to take people to Mars and back in about 2 years, 3 years, 4 years, gee, I kind of wonder about that. You kind of need a little bit of this to kind of be able to swallow that and fathom that, because really it doesn't make sense. I asked Elon, I should have reminded him of this. There are no 5-star hotels on Mars, dude. So where are we going to stay? He didn't come back to me with an answer on that either. So, Elon doesn't know everything. He knows a lot of things, though. All right. Big oil. It's kind of looks like it's breaking out, but not quite. Everybody has gotten really behind this thing. And as we showed in last week's show, which I highly recommend you see because it really does lead into this one, big oil is basically now, oil prices have gone up to $60 a barrel. And that's from $7 in about the last 8 months. Okay, now the thing about that is shale oil becomes competitive between 55 and 60. So it may just be that big oil goes all the way up to the breakout point and doesn't quite break out. This may be one of those phony breakouts that we get every so often, that I get more often than not, and kind of trips you up. But big oil services, again, these are the drillers. A lot of these supply equipment to shale oil companies, so these are going to do a little bit better. It's the big oil companies that are pumping traditional crude that are going to be the ones that are going to be competitive or competed against by the shale companies. The Airline Index, my favorite joke, my favorite sector. Okay, now, you got to understand something here. Oil's going up. That's their biggest expense, all right? Biggest expense of an airline is jet fuel. Okay, what's the second biggest expense? It's the infrastructure. They cannot scale down to half their size like that. They can't just close a bunch of stores because they've already leased land, leased jets. They have a whole bunch of equipment they're paying for. And I think I mentioned this last time, but there are many reports about parking lots full of unused Boeing jets that are just sitting around idly depreciating, and American Airlines, for one, is begging for another $100 billion. They blew through it last month alone. So, but no reason not to buy airline stocks. I mean, might as well. I mean, after all, we are sitting in a dispensary, so anything looks cheap. All right, so Costco Wholesale, again, the retailers, I want to remind you that the retail sector is 70% of GDP. So retail is highly important to how the economy is going to progress. Costco is one of the big four, and this one does not look so good. And so if retail doesn't look so good, what it means is that the stimulus and all that stuff that's been just sprayed out there with reckless abandon, that means that that's been spent or it's been used for something already, and it's just really not enough there. People are not producing goods. They're sitting at home, like me, doing nothing. And, there's more money around chasing fewer goods. What does that mean? Inflation. This is Stellantis. I keep thinking of a praying mantis every time I think of this company. It used to be called Fiat Chrysler. Not that those had brand names or anything, but can you imagine trying to brand Stellantis? Yeah, my brand is Stellantis. Okay, like Atlantic City? No, okay. Anyway, another car company. People are buying cars like crazy. Why? Because our administration is pushing electric cars. Is that a good thing or a bad thing? I don't know. It could be good, it could be bad, but it's not for everybody. There's a place for fossil fuels, and electric cars are not the answer to every problem we have. Ford Motor, look at that. Parabolic growth. It's a sexy tech stock now because it's gone electric, as has General Motors, gone electric. Federal Express, another transportation company that shuttles things around, doesn't look so good either, kind of bounced a little bit, but this is another reason I have a little bit of concern that, we might just be in the last inning of the ballgame, or the last two innings at least. Nordstrom's, again, rounded top, looks like it's also about to reverse itself after having a little bit of a burst of action. Another retailer. MasterCard, people pay with credit cards when they go to retailers. So these are also very correlated to the economy. MasterCard is really a funny chart because you have a rounded bottom in green and a rounded top in red. And sometimes this is why charting is an art. Charting is an art because you have to interpret which one is the right one. And right now you can't. We're going to explain all that to you in our new series coming up called The College of Charting Knowledge. Get your Masters of Charts. You get a Master of Charts degree or a Bachelor of Charts degree from our College of Charting Knowledge. That will be soon to come on the website. All right, so let's keep going here. Target, as they say, en français, looking pretty good. Again, no complaints with that one. I guess everybody that's not shopping at Costco is going to, or Nordstrom's is going over to Target. I don't know. UPS really doesn't look good. Again, for a company, FedEx and UPS transport almost everything that isn't human, and these guys aren't doing too well. So what does that tell you? People have run out of money. Visa, also another one that is a credit card company, not looking so hot. It could go either way. I'm not going to make a call on it right now, but suffice it to say, watch these kinds of companies for clues about the market, or the economy, that is. And Walmart is the next one, and Walmart is one of the big four retailers too. It's not looking so hot either. So again, you've got retailers, and this is a big one. Walmart shoppers are tapped out. So again, some caution is warranted right now. Okay, Wells Fargo, this is another company that Warren Buffett sold. Looks like he sold an awful lot of it at the bottom, and this thing actually, Wells Fargo actually is one of the healthiest looking charts of all the banks. He sold JP Morgan too. That one is really high, but Wells Fargo is one that looked really bad, and it probably looked bad because Buffett held so much and was selling constantly and keeping the price depressed, because look at it, look how much it bounced when he stopped selling. All right, now we're going to get to the fun part. What to buy, how to make money, how to profit, and not let it go up in smoke, as we promised you in the very beginning. This is one of my favorite companies, Aurora Cannabis. Check this one out. Notice that it is right at the green trend line at the right of the chart. This thing can be bought right here, right now, on Monday morning, and use a stop limit of 11. So in other words, it's about, it's roughly closed at 12:21, So give it about a point down. If it goes down a point, you're out. You lose a few percent, but this thing is very likely to exceed the prior top, which was 18 or 19. This thing is headed to much higher levels. The reason people don't hold these things very long is look at all the drawdowns that you get. It is really hard to stay on a bucking bronco, and that's how these things trade. Basically, everybody's speculating, and they're also, they're doing that, and I don't blame them for that part. So I love that company. It's called Kronos Group. This one this is another one that I think could be bought with the same kind of discipline that you'd buy it at around the current market and give it about 75 cents for your stop limit, maybe 11.50, 11.25, something like that. There's no real hard and fast number to where a stop limit is. It's just an amount that kind of, says, okay, my thesis is wrong, and I admit it, and I don't have too big of an ego to, just get out, take my losses, and, live to fight another day. And Lord knows I don't have a big ego. I never have. I'm always very humble. And if I was a woman, I'd be all over me. Did I say that? All right. Anyway, there we go. So here's another graph of Kronos, and the reason I put this one in, it's a little longer. In other words, a longer time frame, and you can see the thing is just starting to enter its parabolic phase. The parabolic phase is like when everything just soars and everybody's making tons of money. This is the beginning of that, okay? The beginning. So right now, this is like buying the dot-com bubble, dot-com stocks at the beginning, not at the end, at the beginning, because these are cheap. You want to buy low, sell high. Actually, buy high, sell high, be high. I know, a little play on words there because you know where I am. Look at that back there. I got to pay their visit in a little bit. Anyway, Kronos is real good too. This can be bought almost immediately. It's a takeover candidate too. Any of the marijuana cannabis companies that are going to benefit from legalization federally here in the United States, which is almost imminent, are going to have tremendous moves, because not only is it going to be federally legal here, but other countries will follow. There are more uses for it now being discovered, including medicinal uses, which is the only reason I would even consider it personally, for medicinal purposes. But there's so many uses, and people, let's face it, people are kind of depressed, and I don't blame them. And so you kind of get a little bit of substitution from alcohol. Thank God, because it's better for you than that, I can assure you. This is called HEXO. Look at all the drawdowns in this, but look how high this thing has gone. This thing is again beginning its parabolic phase. This thing was down at $1, and once it broke out past 5, it was zooming away. We talked about it weeks ago, and it's right at that spot that you could probably buy some of this and just have a stop limit a little bit below your price. And if it hits it, you're out. If it doesn't, it's going to go even higher than it was before, which is like 12. It's going to go to like 15 or 20, something like that. But remember, don't get too greedy. Take your money off the table, for the table takes your money off of you. That's a very important thing to have discipline, regardless of what influence you're under. And I'm under a little bit of influence here, but not that much really. I'm kind of kidding around. But it's very, very important to not get too greedy with stocks like this, and because you will lose everything, and you can make a great decision, and it can go like that. All right, my favorite one, Tilray. This one came out at $20 several years ago on the IPO. It went up to $300. All right, $300. And look at it. It just broke out on huge volume. I mean, look at the volume at the bottom of this chart. Huge volume. Look at that breakout. Tilray went all the way from, it broke out at 12. That's where we recommended it. It went all the way to $70 in about a week and a half. We got out of it early. And thank God, because it came all the way back. And the key thing is to be grateful. When you get a profit, take it and be grateful. Thank God. And you just have a great day. Tilray is, again, I'm going to show you right now. Oops. Show you right now. Tilray is perfectly priced to get in. I highly recommend this thing. I think it will, you should exercise stop limits on it. It's trading about 29. I put 25. You could put 27, 26, whatever you want. The point is, there's some point, 5 to 10% below the price where your thesis is wrong, where you're basically, invalidated, and you have to kind of live to fight another day. And now we're going to get to the fun part, Bitcoin. All right. So this is called the Grayscale Bitcoin Trust. Why does Bitcoin have value? And boy, does it have value. If you look at this thing is trading at $58,000. Bitcoins are trading roughly equivalent. This is kind of a holding company for them. But why do they trade at $58,000? Anybody? Anybody? Ace, do you know? Yeah, he knows. He already knows the answer. But the real reason is, and I'm going to show you this right here. This is the reason right here. It's not that you can call somebody with a Bitcoin or call people using Bitcoin, but you can put it in a cell phone. If you're a Chinese billionaire, for example, and you want to expatriate capital out of the country into the United States, here's the easiest way to do it. Put it in a wallet, put it in your phone, put it in your laptop, and just travel to the United States, and you can sell your Bitcoin and preserve your wealth. There's no other way to do it. It also happens to be the largest holder of Bitcoin is the FBI, who holds about a quarter of it, because of the illegal transactions like money laundering that go on with it and the anonymity. So those are the couple of reasons that Bitcoin has value. It doesn't have any value in terms of being a currency, though, because you can't. I mean, I guess Elon is going to accept Bitcoin for Teslas. I can't wait to hear that one. He didn't even know why it was worth money, and he just put $1.5 billion of very, very scarce treasury capital into it. So anyway, that's the answer. If you have any other questions, or you want to just say, hey, we love your show, we'd love to hear from you, please like and subscribe right down here, and we're going to see you very soon. Thanks for tuning in to Hoot Loot.